Good evening, everyone. I figure out how fast the week is gone by the fact that I have to come back again this Friday and do another episode of the Sheila Exchange with you. Make no mistake, I love doing it. I love being here with you. Welcome back, everybody. Today, we're going to be talking about investing in a global pandemic. And I have here with me a very, my own personal investment advisor, Liang from Kenanga Investors Berhad. Now, how I encountered Pearl was, get this, she's the investment advisor for my 84-year-old mother. And so Pearl has been sort of servicing my mother's investment needs. And my mother at that age, she's got a bit of Chettiar blood. So money is always interested. She's always interested in making money. So she decided based on the advice of my brother, who's got Sri Lankan blood, so also interested in making money. My mother decided to sort of park some money with Pearl and get Pearl to manage her funds for her. And she's so excited when she came and she said, they've gone up like 25%. You should talk to Pearl. And I'm like, Mom, yeah, because I'm like, very adventurous in the business aspect of going out and doing new things. But when it comes to investing money, I'm like, no, I got to know this person first, be comfortable with her, trust her, then I'll talk. And so a few encounters with Pearl as she came over to the house, always with a box of jam tarts or cakes or something. And I went, okay, this person knows how to do customer service. So, good point. She got brownie points for that, pardon the pun. And then she would sit and have this real good chat with my mother. And my mother would go off. And when Pearl went off, my mother was very happy. So I said, good feeling there. From all ages, she's got that ability to create rapport and get along with people of all ages. So when people are in the service business, I always take a bit of time to get to know them. So when I heard of all the people my mother had introduced Pearl to who are very happy with the investments, I said, okay, I think I need to talk to Pearl Liang. So one fine day, Pearl came over to see me and I said to her, I got money I want to invest, but I don't want to lose money. So if you can make sure I don't lose money in the long run, because, if you're doing investments, you cannot put your money and then next year expect you want to take out and you make a big amount of money. It's got to be there for a long period. Now, why I wanted to invest with Pearl is because I had some savings with an insurance company. And after about 8 years, about 8-9 years, it had only gone up by about a few percent.
Right.
Okay, it's gone up by a few percent and I wasn't very happy. So I said, okay, Pearl, let's talk. And guess what? Pearl actually drove me to the insurance company to go and sign up and sort of cash in on my policy and all that and take it out. And then took me for tea. And so here we are. Why I decided to talk to Pearl on the Sheila Exchange, because as you know, I put legitimate people that I trust, whose stories are really going to be of benefit to everyone, and who can actually maybe give us advice in a very authentic way with lots of integrity. So that's why Pearl is here with me today. Pearl, welcome. Long introduction.
Thank you for having me on the show.
All right. Okay, so Pearl, your professional journey. I always do this with the people on the Sheila Exchange. I say, tell us about your professional journey towards becoming an investment advisor. I'm sure you didn't, like when you were like 10 years old in school, they asked you, what do you want to be when you grow up? I want to be an investment advisor, because 10-year-old doesn't know that. So how did you get to here? Tell me about your journey.
Right. No, so I'll keep it short and simple. So I graduated with a degree in marketing from the Anglia Ruskin University in the UK. And I've been in the financial industry for about 9 years now. So that's coming to a decade. Oh my God. And I'm also a certified financial planner currently with Kenanga Investors Berhad for the past 4 years. But yes, nobody wakes up one day and say, I want to be an investment advisor. Yes, but I realized in my past job, I was selling, but I wasn't giving enough value to my clients. Like I was only at one certain position. But being an investment advisor makes me realize there is so much more I can provide to my clients: insights, data, things that they don't usually read about on a daily basis. And it just feels nice or important when my clients will call me and say, Pearl, I came across this investment. What do you think about it? Is this company reliable? Do you think the market is going to behave in such and such way? What do you think? So all this requires a lot of knowledge. And because I spend 24/7 on the job, I guess I provide quite a bit of value to my clients there. Yep.
Okay, great. That's a nice story because a lot of people just go on doing the same thing and they don't really enjoy it, but they keep on doing that same job because they think they can't get a way out. And I was reading this book by Jeff Goins. It's called The Art of Work. And it says the professional of the future. Last time when you were small, parents say must be doctor, accountant, engineer, lawyer, finance, okay lah, business management, not so happening. But today, young people are studying all kinds of things, right? And Jeff Goins says that the career of the future is not going to be just any one job. It's going to be people leveraging on all their different competencies to go out there and not just make money, but to make the world a better place. Because I am always a big believer that you need to have a purpose. And for you, you seem to have found that purpose. Because, the way I see you approach your clients and do what you're doing for them, you have a lot of joy from that, don't you?
I do. I enjoy, like you say, scoring brownie points. Like even going to the bakery to pick something that I think my clients would love to have for tea makes me happy. And I'm like, I'm going to walk in there and then give them this little thing. It brings me joy to be able to tell my clients important things, and it brings me joy that they reap benefits at the end of it. They're happy with the investments. That is realization of client goals. Very important to me.
Yeah, I know, because every time you come here, you're like a regular ray of sunshine for my mother. And I tell you this, my mother doesn't take to people that easily. And it's not just because in the investment advice is making her money. No, genuinely, she really is very excited. Pearl came today and she brought these cookies. Have some. So I'm like, and that actually goes a long way. That is all about the customer relationship, yeah. And especially when people want to buck money, you must have a relationship.
Correct.
So sometimes you have these people don't know you from Adam, call you one time, expect to set up meeting and that you're going to buck a lot of money with them. It doesn't work that way. So you got into this line because it gave you a sense of purpose. It gave you a sense of joy to interact with the customers and watch them happy because their investments.
So that's one of it. But the other thing is I reached an age where I personally also need an investment portfolio services, right? And then it was hard because I was working so hard trying to make money, but also trying to invest my money. I needed someone professional to help me manage my finances. So then I went out there to meet all these, so-called investment gurus, specialists and all that. And then I found many of them leaves much to be desired. Do you know what I mean? They were either trying very hard to product push you towards one direction, not giving me very unbiased advice, or they were borderline unprofessional. So then I thought, heck it lah, I'll do it myself. So I went into it, I learned the ropes, and I started scaling it to a career. And it all really started with a personal need. And I think I fit in the gap quite well because I think I'm bubbly, I'm quite nice with people, I can interact very well, and I just want to bridge that gap where people need services, but they cannot seem to find the person that they can rely on to give them guidance. So yes, today I provide independent, unbiased advice to my clients that does not lean on a single product or company per se.
Yeah, I like that. That's very interesting that you couldn't find an advisor who kind of met your needs, so you became one. Advice to everybody there: if you can't find a surgeon, a doctor who meets your needs, don't think about going to medical school to become one and medicating yourself. Or if you want to do also, that's fine. But I see where you're coming from. And you're very right, Pearl, because I've had people come to me and they're very fixed in the way they approach. Every client also same.
Yeah.
They come to you, you give them the appointment, is already a winner for them, but they don't know how to make use of the opportunity, you know. So what they do is they come here, they show you their folders, the portfolios, and you say, yeah, but I don't want to see all this. I don't understand all this. The average person doesn't understand all those columns of figures and projections and all that, right? So I said, I don't want. But they say, no, but miss, you got to see this, you know, and you've lost me, lah. You lost me, you know. So and you know that, right, Pearl? When you came and we decided to talk, I'm very straight up with you. I said, Pearl, this is what I want, to make money in the long term. I don't want to lose money.
Correct.
All right. I said to you, you
Correct.
advise me, right? But at the same time, I'm sure you've been in the position now. The client calls you the advisor, but then they are advising you how to advise them. How do you handle people like that?
Yeah, so I always tell them, you know, you are a CEO of a manufacturing company, you know. You call me up for investment advisors, but I won't call you up and tell you, look, your production line should be so and so, you should do it like that. I won't tell you that, ma. So the same thing, if you go to a doctor and the doctor gives you advice, are you going to tell the doctor otherwise on how to do his job? So I would always tell my clients like that, lah. So if you had the time to do your own investment and you're doing it very well, you wouldn't even have looked for me in the first place.
You are absolutely right. I feel that if you are going to entrust a service to the hands of a specialist, then you should trust them. If you don't trust them, don't hire them. But there are some people, everybody is so they don't trust lah. You know, you put
except
anybody,
for themselves.
Except for themselves. So like you lah, then go, don't trust other people, become investment advisor. Yeah, I mean, that's the only way to go. It's a fact of the matter. I've had people like that. You know, in coaching, for example, they're sitting down there and they say, aren't you going to ask me this? Aren't you going to do that? Is this the right way? I ask, am I the coach? Are you the coach? You know, if you paid me money to coach you, then let me do my job lah, because I do get great results. You chose me because I get great results. So, you know, don't tell me how to do my job lah, you know. So yeah, I totally get where you're coming from. But at the same time, we also have to understand the client's point of view, that they are scared lah, especially when it comes to money, you know.
Correct. Which is not back to your point of there's no one way to treating each client. Everybody will behave differently. They have their own mindset. So if you have enough experience and you meet enough people, you would know how to maneuver around these clients.
Which you did with me, because do you agree I was a bit tough with you, Apple?
I would say the whole family is tough.
Must be the Chettiar and the Ceylonese blood inside. Yeah, so we were all tough. I was saying, we don't lose money. And but I was very clear with you. This is how much I have. Tell me where you can park it for me to get the maximum returns. Correct. And you straight away knew what I wanted. I don't want all the blather about how, where, why, and all that. I just, right? Correct. And also I told you, but if something begins to lose money, you got to be watching out and keeping me posted, which you have been doing, to your credit. Thank you very much.
You're most welcome. Yes.
At a time like this, right, when people are reluctant to meet face-to-face and all that, how are you getting clients?
Right. So the pandemic has definitely caused a barrier in many businesses, and it forced many businesses to rethink or to pivot their whole business model. But like you said, if you want to engage in a service with a professional, you would prefer to meet, having face-to-face meetings and whatnot, right? So if you see a doctor or a lawyer, you want to interact, get the vibe, feel the person before engaging in the services. So it's a bit more complicated than, say, you go onto Shopee and buy some stuff and check out.
Correct.
Right? Yeah. But the saving grace is, thanks to technology, there are platforms like Zoom or Microsoft Teams where you can conduct virtual meetings with your clients. Right? I personally conducted quite a fair bit over the MCO course. And because some clients are really still hesitant to come out to meet.
Yes.
Right?
Fair enough. Yeah.
Yeah, but at the end of the day, I personally think it is still not as effective as a face-to-face or in-person appointment. And as hard as it is already to get an appointment, it's even harder to get a total stranger to meet you for the first time virtually.
Yeah.
Right?
It's true.
Yeah, the most crucial part of any professional service in the aspect of client generating is reputation and credibility. So this brings back to, you know, how Madam Daisy, your mom, did such a wonderful job promoting me to the entire family.
Are you sure you're not paying her to be a marketing agent or what?
No, but I owe her many meals.
Yeah, I'll join the next one. Yeah.
No problem. Yeah, so word of mouth is invaluable, right? One good, happy client like Madam Daisy is worth more than 100 unhappy clients. So, really, the best way to get clients at any point of time, not just the pandemic, is to do a very good job for your existing clients, and then they will pave the way to give you quality referrals. Yeah,
Mm.
but I
All right.
consider myself quite lucky because I have been in the industry for quite a while now, and I've had the time to build a substantial portfolio of happy clients. But yes, I agree with you. Those who are newer in the industry, this year especially, it would be like a huge mountain to climb.
Mm.
Yeah.
Right. So, I mean, that's another lesson there that if you've been doing credible work, if you've built, relationships in your business, relationship selling again, and then you have this huge database of clients. Now is the time during the pandemic to leverage on that to get the referrals. And in your case, Pearl, you don't even have to ask, they're just referring people to you.
I'm so grateful.
And that is really, really a huge testimony for anybody in who's doing sales, whether it's investment products or services or whatever. And my mom is like that. She's a very sort of skeptical about things, but when she buys into you, she'll just go and refer you to everybody. So, and that's how it should be,
Mm,
especially at this time of the pandemic. A lot of people are struggling.
right.
Everyone says buy this from me, buy that from me, and so on. But how do you really convince people to buy you? You need to give excellent service at all times. You
Mm,
need to look at what clients really want, clients fears. And you, Pearl, being in financial investment, I'm sure you're
yes.
very well versed with the fears of clients, kan?
Yes.
Always say like, I want to lah, but I takut. I want to, but I takut. Correct or not?
Correct. That's true.
That brings me to the next question lah. People think at a time like this, it's not a good time to invest because
Mm,
they feel that the future is a bit uncertain. We don't know whether we should hold on to our money, just park it in like safe investment like fixed
right.
deposit or those snail pace growth investment.
Mm-hmm.
Okay, I think I best keep it there. Why? It's not a good time to move it into a faster growing portfolio and so on. What are your thoughts about this? Clearly, your thoughts are no, go move, but tell us why you think so.
Okay, so yes, especially in a time where people are literally dying out there, investments can sound really scary. But even without the pandemic, investments already sound scary, right? So you can imagine the amount of fear there is in the general retail market. But I think this is really down to the perceived idea of investing here in Malaysia generally. I think in other countries, investing is a very sophisticated term. Malaysians, they are more on hearsay. While you say that I buy, see how, that kind of thing. They naturally think there's a lot of risk involved and they view it as only the rich people, something that rich people will do.
Mm,
It requires a lot of money, a lot of time, a lot of knowledge, right? But really, if you replace the word investing with the word saving, it should not make
uh,
any difference at all, right? There is no such thing as a bad time to save money. Okay, and it is financially prudent, healthy habit to do it, right? So the same thing, you should think of investing just like saving. There is no such thing as a bad time to invest, right? It should be regular, it should be habitual, but the million-dollar question is, where do you invest the money in? So, for example, at a time like this, it is clearly not a brilliant idea to invest in things like, say, airlines, right? Tourism, hotels,
yes.
and things like that. It will scare you quite a fair bit. But if we switch it up and say we'll invest into industries like medical or
Mm,
pharmaceuticals, then it suddenly makes a lot more sense, isn't it?
mm,
Yeah. So really, first of all, there's no bad time or good time to invest. You should invest whenever you're able to, and you should in fact prioritize it, just like how we're always taught to save money for rainy days. But the second question is what to invest in. So you were saying snail pace fixed deposits, isn't it? Okay, fixed deposits they serve a very specific purpose, which is liquid money that you can access in times of need, and that is it, right? But if your idea is to do wealth building, to grow your wealth, then it is absolutely the worst place to put your money in. Simply because the rates are too low and you can't even beat inflation over a long period of time. Yeah. So sooner or later, you will realize you have to start investing. And these fixed deposit rates, they're going to stay low for quite a while if you're aware of the news lah. And
Yes.
chances are the following year, it could go even lower, right? So the question is, how much lower will it go before you tell yourself enough is enough, right? It has fallen about 50%, somewhat from 4% to about 2%-ish in slightly over a year. So if you don't stop doing that now and you're going to keep putting your money in something that is below 2% per annum, literally, in my opinion, is a huge waste of time. Or are you still hopeful that it would go back to the good old days of 8% per annum? That's very unlikely. So you have to start building a portfolio that can generate at least 3 to 5 times the FD rates. Yeah.
Might as well put your money under your mattress lah, huh?
Correct. So you must well take and eat lah. Just do something to spur the economy or something.
Yeah. And that's the thing lah. That's why I started waking up to all of this, right? I'm looking and saying, my mother at 84 is putting money here, then investing. What am I doing, right?
Yes.
So how then do you advise people who have no knowledge or experience of investing to do so? How do you build trust with your clients so that they trust you with growing their money? Okay, there are a lot of people out there who never done this. I like the reframe you did, that investing money is saving money and growing money.
Right.
Correct or not? So you want like a healthy wealth creation. Those are great words to use, right? So how then do you convince someone like that? There might be people out there who are listening like, for me, saving money, EPF, I got savings in EPF and I got some money in FD and in the bank. That is saving money. But how do you convince people like that?
Good question. So there's really only one way to how to do it, is you to get started. You have to get started to take that leap of faith and to try it. I mean, it's 2020 already lah. Back in those days, my parents' time or whatever, your parents' time, those days are gone. We need to really be a bit more proactive with the money. It's a bit like swimming. You can't read 100 books and then you take your first dive and you expect to swim like a fish. Right? The practical part is a different world from the theory. So with investing, you can read as many books as you want. You can understand the theories, but chances are the minute you invest, you will feel very differently to watch your money shrink and to watch your money grow. Right? So the old saying of the famous saying of buy low, sell high, always say one. I'm sure you always listen to it. Right? It's so simple to understand, but it's so hard to practice in reality. And that's when people like me step in to tell you, because emotions play a huge part in investing.
Yes.
A good investor should not have a lot of emotions. Unfortunately, it's very hard to do. So emotions come in and then it will take away all your reasoning, your rationale, your logic, and you get a bit scared and things like that. Right. So my job is to provide as much as information as I can to educate my clients, especially the new ones with no investment experiences, and share them my experiences to tell them in good times, what do we do? In bad times, how do we react? And things like that. Yeah.
Hey, so now that you're on that track, was I a good investor? Not much emotion one, or was I too emotional? Tell me.
You are a good investor because basically you laid out, I have this much risk appetite, I have this much of a duration that I can hold on to, and I'm expecting this much of returns, and that is good enough for us to work on. But there are also clients who are like very like kanchong, every day must go and see. You
can, but it's a mistake.
Yeah,
because there will be days it goes down and days goes
up.
Right?
Correct. And then you will be forced to react. And if you don't react, you feel like you're not doing anything, which is not right actually. Yeah.
So if let's say I've invested with you, what's a good sort of time frame for me to go back and ask you, look, Pearl, check back with me? Is it 3 months or is it 6 months or do I wait 1 year?
Okay. So if the client specifically said, I'm just going to chuck this here for the next 2 to 3 years, I will probably give them a half-yearly review, right? But for some who are a bit more hands-on, they want some active thing going on, a quarterly review sounds very decent actually.
Okay, so when are you coming back to me?
Next week
Next
for
week,
Christmas.
so nice. Give me some good news.
Yes,
Okay.
but coming back to the question, how do you get started, right? I just want to emphasize this. It doesn't have to be a big amount. You just get started somewhere, right?
Okay, what kind of amount can you work with lah? Like
Mm,
not shameful amount lah, though like 500, 1,000 like that. I mean,
right.
what's a good
So most funds out there, they have their own minimum criteria. So the very normal ones would start with 5,000, and then the more sophisticated ones could go up to 20,000, right? But I just want to tell your audiences out there, any amount that you won't lose sleep over, that you're comfortable with, get started, you get your feet wet, and then you will start to understand what kind of risk you should take, what you can't take, and then whether I can do a little bit more in the future. It gives you a bit more confidence so you can start growing the portfolio lah. Yep.
Okay, so I just want to, just out of curiosity's sake, in the past, say 10 months of the pandemic, eight months or whatever, what has been sort of the greatest margin of growth? We don't have to say who, what stock, what portfolio, but what has been the biggest margin of growth that you have seen?
I have seen this one particular one do 75% in the course of the past 11 and a half months.
Wow.
Yeah.
Is my money there? Let me know later.
Okay.
All right.
Yes.
So who are the most risk adverse and the most risk orientated people in today, in your opinion? Do you have some sort of demographic data on this?
Okay, so you will see an equally diverse segment of people from all sorts of race, religion, background, even geographical location, being very risk adverse as well as risk seeking. But if we were to really just simplify it and segment investors according to their risk appetite, then one recurring theme that you would see is the income level and the net worth of the client.
Okay.
All right. People who earn more naturally have a higher disposable income. These people will tend to be more comfortable in taking risks, right? The normal layman would think these well-learned or well-educated people who has a professional occupation, you would think they understand finance and investments better. But I think in reality, not at all. They are mostly quite still conservative, but you will see them to start building an appetite for riskier investments, a higher return investment as they progress work-wise and hence income-wise, right? So I guess there's this issue of a global issue in income disparity, where the rich is getting richer and the poor is getting poorer. Okay, simple, because the rich is able to take on more risk these days, they have more money, and then this opens up more possibilities in their portfolios, right? They have access to a wider range of investment instruments that may or may not be available to the mass market, because these more sophisticated investments, usually their higher entry point, they have a minimum higher amount, and also a longer holding duration that the general retail market may not be keen on, right? Because they are already scared, and then you give them something more chunky, they like scared. Yeah, so the point is, no matter how rich or poor you are, you should start investing, because if you don't start, then you can never catch up. But the moment you start, you have a chance at least, right? So you can speak to the professionals about what you can do to start today. Many of them is significantly accessible to the general market now. And investing is no longer just for the rich and wealthy. I have clients who are in their early 20s, right? But because they have joined the workforce not too long ago, to be honest, they don't have much lah. But with what little they have, they came to me and say, look, I want to invest X amount of money per month, and I just want to chuck it aside. I don't want to look at it. And I really applaud them for their curiosity and them wanting to try, because they understand times are different. They really have to start while they're young. Better late now than never lah.
Hey, I wish I had known people like you when I'm young lah. At that time it was even worse, right? The investment landscape was even worse, and you just didn't know who was a scammer and who wasn't. And the thing is, Pearl, I do find sometimes that companies, right, they really need to invest not just in the product training, but in the integrity training. Because there are a lot of people, like so-called advisors, go out there and they don't tell you the full picture. They just want you to sign up because they want to take the commission. And I just feel that there needs to be a system somewhere where, you know, we really go after people, because there are people like those are giving your industry,
A bad
you know,
rep.
your profession a bad rep. Correct,
Yeah.
you know. And that's kind of what happened to me in my previous investment. I was just told, painted this glorious picture, and then, you know, come back 8 years later. Okay. So at this point in time, where are some of the better portfolios? I mean, we're talking about geographically or industry-wise and all, to invest in for the layperson.
Okay. So the pandemic is still at large now, but we have seen markets recovered very quickly and they're actually headed for a very solid run. Simply put, markets are doing very, very well. All right.
Okay.
There is a global recovery theme at play. So ideally, you want to ride on this wave and take a little bit more risk in your portfolios, be a bit more risk seeking. Uh, equities would be a good buy.
Okay.
Right? Equities, don't buy, I won't say don't buy lah, you know, bonds and FDs, all these, you can buy this later because equities are having a good run
Good
now.
run.
So position yourself, position your portfolio a little bit more equity bias so you can capitalize on the whole situation. But for me to say easy, for the lay market, you know, when they read newspapers, market headlines and all that, it's very conflicting. Mainly because mainstream media are always looking to publish terrible news because bad news always sells better than good news. So if you are scared, I would always say invest in an all-weather portfolio. An all-weather portfolio means a very well diversified portfolio that consists of different asset classes. So you would have things like equities, fixed income, things like that. And then you scatter them across different regions. So if one region suddenly have a correction or dip per se, then you are minimizing damage to the whole portfolio to a large extent. So, but yeah, if you want me to pinpoint, local equities, Malaysian equities sounds good. A little bit of China and a little bit of US stocks would be a nice exposure.
Okay.
Yeah.
That's great. So do you have stories of clients' investments growing during this pandemic? Like you told us just now, 75%. Very impressive, that one. So do you have many of those stories like that where clients come back to you and say, wow, Pearl, very good. You know, I didn't imagine that you would be doing this well.
Yes, of course, plentiful, right?
Yes,
This year especially has been very eventful. I would say that almost all clients with an equity bias portfolio is up and positive. And so as long as you have equity allocations in your portfolio this year, you're probably making money. And we're talking about insane double digits, not just making money. Very, very good numbers here. So again, the numbers are beautiful, but to the lay person, when they're listening to this, they'll be like, no lah, too good to be true. Are you sure? You know, people are dying, I'm losing my job, and people are getting retrenched. How does that even sound possible? Right? So again, back to where are we investing money? Every year people tell you times are bad. Right? No one year they will tell you, hey, this year is damn good, right? So yeah, every year they tell you year in, year out, same thing, but let me let you into a huge secret. Every year people are still making money. Right? So the question is, what do you buy? Where do you buy? So my job is to explain the reality of it, the backstory, what's causing markets to move up, to move down. Markets started the year very well, and then came March with all the MCO restrictions. Globally, markets slumped. Everything took a nosedive, and this is the important part. What do you do in times like that? Right? Now, there are clients who are rational and say, hey, let's evaluate what's happening and think logically what is the right thing to do at this point. Then you will realize the best thing to do now is to buy more, right? Remember, buy low and sell high? Again, easy for me to say, hard for you all to do, all right?
True.
But if you do not have access to additional funds, right, then the next best thing to do is nothing. You just wait it out. You don't rock the boat. You let the markets correct and rebound like they always do. And then if you have added more or if you have stayed in, you would have covered well and above. Simple. But then there's on the flip side, those who have panicked and got all emotional about it would have exited the market. Now, these are the ones who overreacted and they got burned because you're realizing a loss.
Yeah.
Right? So you have to explain the reasoning behind all these events. And yeah, but most investments have happy ending lah, but by no means a fairy tale, right? The process will be and can be scary, but you need to know what to do at times like this. Then you remember, oh, Pearl has explained to me when things like that happen, we should do this. How do I average down? Da, da, da. So shouting beautiful numbers is one thing. The other thing is being able to justify the logic behind these numbers.
Yeah. Yeah, I think that's good. And what I liked when I had a conversation with you is the pre-warning you gave me that yes, and here's the thing lah, here's the thing. You can have all the financial analysts and forecasts and all that in the world, right? Oh, we're in for a good year and good 5 years and all that. But everything now is shot to hell, literally.
Yeah.
Because with this pandemic, it just changed the whole landscape of everything, of doing business for everyone. And yet, I am hearing so many wonderful stories of people who say this is the best year ever.
Exactly.
Right? Because there is still opportunity.
Correct.
And then, just like in wartime, there were the companies that were involved in war supplies and all that made a lot of money. So in the pandemic, like you said, medical supplies, pharmaceuticals, companies making masks and gloves and all that, yeah, they're probably booming. And at the end of the day, what you said to me is there will be times when it goes down and there will be times when it goes up. What we look for is the balance.
Right.
What we look for is the average growth. And that's what people who want to invest should be looking at, right? Not the, suddenly gone up to 50%, but you also must be mindful of the fact that if it can grow so fast, sometimes it can drop also.
It can go sideways, yeah.
It can go sideways. So you need to be looking at the average. I studied mathematics, so I know average very well. Averaging, I'm very good at calculating in my head averages.
Silani.
So you were saying that sometimes there are clients like that where the investment doesn't work and then they panic and all that. You kena marah, no? They come and scold you or not?
Fortunately for me, most of them
You're too nice lah.
I really like to think it's my reasoning lah, right? You have to be the calm, rational person because they are not. So you have to be like the pillar of support, telling him to reassure him that no, you're being emotional. This is how we should do it. And you reason it out. And most of the time they are like, okay, you're right. I just need to chill. Yeah.
They're trusting you.
Then most of the time they'll come back to me 5 months later and like, oh my God, luckily you talked me out of it. Otherwise I would have completely missed the boat. Yeah.
If ever I panic like that, you got to do that with me,
so I'll bring over a cake and tell you to have tea.
Yeah, so that 5 months later, I say, you're lucky, I didn't listen to my instincts, I listened to you. And I think that is what we all need to learn to do, is trust the consultant.
Right.
But we can only trust the consultant if the consultant has taken the trouble to build that relationship and inspire trust in us. And I think it's what you're saying. And a lot of times in terms of investment and, the professionals come to us and you can see that they so want to close the sale. They're not really that interested in what you want,
Correct.
And in that, Pearl, I must say that you have mastered that art. And I'm not one person who gives praise very easily. I'm in the business of training. I do sales training, customer service training, lead generation training. You say it, I do it, right? And I must say that in that sense, you have actually fulfilled that criteria I'm talking from a client perspective and I'm talking from a trainer's perspective, a professional perspective. You are what I would hold as an example of how to do relationship selling.
Thank you so much.
I'm not getting any money from her for promoting her today. It's just that I am a person like my mother. If I truly believe and I'm happy and comfortable with a service provider, I will promote them full scale. But if I'm not happy with the service provider, I won't say anything to anybody. I'll just terminate my agreement with them.
Thank God.
So I think we are in a long run now. I think you're with me till I go up to the big investment market in the sky. I think so. I'm in it with you for the long run.
Thank you for your trust.
What else to do? You need to, and this is a lesson I learned late in life. In order to grow your wealth, you need to invest your wealth. parking it into a bank account ain't going to do it, right?
That's right.
Because, I come from a background where parents were very conservative, especially my father and all the people in my life were very conservative. But I must say thanks to my brother, actually, Ramesh Singham, who actually started investing with your brother and then with you, and was very happy with his investments, and therefore now you are now the Singham family
Go-to person.
de facto investment consultant. Okay, I brought in my son-in-law, my daughter, and all that simply because people. If you want to do business, that's the way to do business. You don't have to go out there and knock on doors. Doors will come knocking. People will come knocking on your door because of trust. Especially in investing money, people will always only work with those that they trust. Am I not right?
Yes.
Well, how it must be so good to be trusted by so many people out there. But I think good for you, good energy for you.
It does make me feel good and makes me want to keep doing more for my clients, bring more value for all of you. Yeah.
Okay, next week we talk how to bring more value for me. always. Okay, so now, Pearl, any final words of advice for our viewers?
Yes, I want to tell everyone out there listening today that you should just get started in investing. Build a small portfolio if you haven't already done so, right? Doesn't have to be a big amount, get a head start. The first step is the most crucial, right? Get a feel of, oh, this is what investing feels like. So, get some professional help out there. You can just come to me if you want. And then I'll be more happy to share them with you. But investing is the future. You will be forced to do it one way or another due to the invisible force of inflation. You have no choice, right? And then understand also investment is a lifelong journey with its ups and downs. There will be many emotional moments like a roller coaster, but just maintain calm and rational, you will do fine. But also, lastly, because Malaysians are quite a greedy lot, right?
We are.
Right? They tend to fall for get rich quick schemes, Ponzi schemes. Stay away from all of that. More often than not, the return sounds too good to be true in a very short amount of time. And then you hear over newspapers, big headlines, Malaysians scam over XXX amount of money. So just engage certified licensed professionals. Make sure you get someone who is experienced, who has been through all sorts of economic weathers. So not just someone who's been through the bullish times, the good times, but also someone who's been through the turbulent ones, so they know exactly what to do and how to do it at a point of time. Yep. That's it.
Yes, and certainly I can testify to the fact that if you just gave Pearl a call for a conversation, she will never push you into investing. She will lay all the cards on the table for you, and she will allow you to take your time and make that decision. I think from the time I first met you and it was proposed to me that I should talk to you about investments, it's taken me more than a year.
Yes, that's right.
I'm a tough customer, I tell you.
Yes.
Taken me more than a year, but during that year, I was watching what you were doing and how you were doing it and what people were saying about you, not just my mother, but, people that she had introduced you to who are even tougher than her. And they were people who had been doing investment for a while,
Right.
financial people, and they've decided to come and have a conversation with you. So so that's how it has worked out. So anyone interested to give Pearl a call, please do it, or email. Do you have an email or contact? I rarely do this, but I think if anyone's interested, the least they could do, the best thing is at least talk to you first, rather than go to some unknown person. Do you have a number, Pearl, that you want to give us?
I can leave you my number and my personal email, then the viewers can get in touch with me.
Can you tell it, verbalize it over the
sure.
phone?
My mobile would be 012-259-6383. And then my personal email, let me see, which one am I using? pearl.kenanga@gmail.com.
So that would be pearl.kenanga, Pearl as you PEARL dot Kenanga, KENANGA
pearl.kenanga@gmail.com.
At gmail.com. Okay, so you can call her pearlkenanga@gmail.com. Okay, right.
Yes.
All right. Thank you very much.
Thank you so much for your time. I really appreciate it. See you soon, Sheila.
Thank you, Pearl, for joining us. It's Friday afternoon. You've been listening to Pearl Liang speaking to Sheila Singham on the Sheila Exchange. Thank you for joining us.
Thank you. See you. Bye.